Well, let's get the markets update now. The local bourse facing subdued global markets this morning as markets will be reacting to Chinese data, while South Africa is bracing for the fallout from a third wave of the COVID-19. Locally, investors will also be digesting President Cyril Ramaphosa's announcement that South Africa is moving to a level 2 lockdown as COVID infections increase, with the curfews tightening and the number of people that can attend indoor events reducing to 100. Joining us now to give us a sense of how the markets are looking this morning, Petri Redelinghuys, a trader and a founder at Herenya Capital Advisors. Mr. Redelinghuys, it's the morning after the announcement. Let's start with the stocks and local currency, which have been rallying in the past week. Take us through how the markets are faring this morning.
All right, so I think let's quickly chat about, before we get into markets, I think one of the questions I think that will come up quite a bit is how much does, the additional level of lockdown really impact sentiment towards markets? And the truth is, from what I could tell, at least, not a whole bunch has changed. So the curfew is an hour earlier, sure, and there's some restrictions on gatherings and such. It's about 25% less in terms of how many people are allowed to gather, 100 people inside, that kind of stuff. So it's not really that much of a change. I think it's just kind of a bit of a wake-up call for people to take wearing their masks and the social distancing thing quite seriously. So I guess we'll see how that turns out. Also, today is a bit of a strange day because the U.S. is closed as well as the United Kingdom. So these are two of the biggest participants in our market, particularly the U.K. market. London trades a very large percent of total volume traded on our market on any given day. So with them being closed, it's going to be a bit of a quiet day, I think, and the same goes for the U.S. So we've started off relatively strong. If you look at the top 40 indexes, up almost 0.5%. Resources up 0.75%. Industrial 25 up about 0.2%. Retailers also relatively well. They're up 0.5%. So it seems as though we're off to a good start. Also, just to want to mention, mining up around 1%. So it seems as though we're off to a relatively good start, and we're taking our lead from Asia this morning. We saw Asia today, 10 cents was up just over 4%. Brent crude oil sort of catching a bid quite well as well. There's some OPEC plus news that's probably driving it slightly higher. So overall, it seems that we're off to like a fairly strong start today for the week. But two of our biggest markets, namely the UK and the US, are closed today. So I think it will be a bit of a low volume, maybe slightly higher volatility session. Maybe we get a strong day, but I don't think it's going to be, the real direction is going to come once the U.S. markets open tomorrow.
Sure. Let's talk oil prices, Petri. They climbed in early trade ahead of the OPEC Plus meeting this week. This is going to look at the supply guidance. Take us through the latest developments around this particular commodity and what we can expect from that OPEC Plus meeting tomorrow.
Right. So one of the things we've been seeing coming out of OPEC over the last couple of days, over the last couple of weeks really, is that we have compliance, or that the OPEC Plus sort of group, which is OPEC plus a couple of other additional nations, that there is high levels of compliance to output constraints in terms of oil production, essentially. As we know that it's not okay for the bread companies to form a cartel, but if you're an oil driller, I suppose it is. So the oil sort of, cartel that kind of controls the supply side of the market in an attempt to sort of make sure that, they attain the prices that is favorable to them, or at least economically viable for them to operate. We see high levels of sort of, them trying to push essentially the oil price higher by limiting supply. So they'll be coming out and talking a little bit again. I think there's a number of things that are on the agenda. One, there's some conflict in the Middle East. How does that play out? If there are any reaction, how does that play out in terms of sanctions and stuff on countries like Iran? If Iran gets involved with what's happening between Israel and Gaza, and a lot of sort of news flow around, the people that Gaza is being bankrolled by is the Iranians. So I guess we'll see what happens in that situation. That that Middle Eastern conflict scenario always tends to increase oil prices a little bit, as that's where a lot of the supply comes from, right?
Sure.
In general, though, I don't think that we'll see too much. I think what we're seeing is the world economy kind of rebounding. We're seeing that being led by China, and I think that we probably see OPEC open the taps a little bit, increase production so that we can start to meet the rising demand, right? Because oil prices are trending higher quite strongly, and have been for some time. And that's mostly because we've seen, obviously, a huge drop-off in demand, followed by a huge sort of cut in production. So now that demand is rising, do we see OPEC move higher? I think we probably do, but I haven't got any forecast for what to expect for the week.
Okay, let's quickly wrap it up, Petri, with Standard Bank releasing its voluntary trading update and the trading statement. What do those numbers look like, very briefly?
So Standard Bank, well, we're expected to declare an interim dividend. They're doing relatively well. Their numbers were generally sort of in line. Credit performance was all right. Credit loss ratio sort of between 0.7 and 1% of the total credit outstanding. So it's kind of within guidance. You know, they say things like capital and liquidity levels remain above regulatory minimums and internal risk appetite thresholds. So it seems as though they've done relatively well. The headline earnings per share increased to R6.63. Expectation was around R5.71 for the same period. So that's slightly ahead of expectations. It is a slight beat. That takes full year earnings to R13. So it is slightly, they're doing better than what is anticipated. I mean, it's not shoot the lights out, sell everything and buy a Standard Bank, really good performance, but it is still ahead of expectations and relatively robust given the circumstances. Obviously one of the major fears around this time was what happens to that bad credit impairments, what happens to the credit loss ratios of these credit providers, right? And if you look at Standard Banks, it's still sort of between 70 and 100 basis points. That's very good.
Yeah. All right. Petri Redelinghuys, thank you very much. Our markets watcher this morning, taking us through some of the movements in as far as the Johannesburg Stock Exchange is concerned.